Greetings, members one and all of the Salivation Nation. The markets continue to move a bit with the news of the day. It looks like the gold prices and silver prices have settled a bit higher and seesawed a bit, and because of what the Fed has said about the economy and a little bit of concern about trade as well. Let's explore this article from Market Watch. Yes, indeed. Before we do that, let's take a look here at the prices for gold and silver. We can see here that they are settling up a bit higher. Gold's up $10 today, a 0.73% climb. Silver has outperformed gold in its climb today, reaching closer to that $17 level, which used to be the resistance, but that has obviously been blown away here. But it is getting back closer to that. And platinum and palladium have made a pretty big jump too. Platinum is up $16. It is the winner of the day. It's jumped up to $941 now, well above that $900 sort of resistance level there. And palladium is up $16 as well, a 0.85% increase, now nearing much closer to $2,000 now than before. It's over $1,900 now in the ask price, almost at $1,900 in the bid price. Very interesting. It's been fascinating to watch palladium make its move upward, because I remember a time when it was $167 an ounce. Wow. Kind of wish I would have bought more. Got a couple ounces back then, but I'm going to hold on to it for posterity's sake. And so there that is. All right, moving ahead here. Yes. Gold prices settled higher Wednesday here, according to Market Watch, supported by uncertainty about international trade policy. Then seesawed in electronic trading after the Federal Reserve left its benchmark interest rates unchanged as expected. After gold futures settled in for the session, the Fed said it would leave its short-term Fed funds rate at a range of 1.5% to 1.75%. Shortly after the Fed news, February gold pulled back to $1,473.10 an ounce in electronic trading, then rebounded to $1,477.50 ahead of the Fed press conference. Prices had ended the session up $6.90 or 0.5% at $1,475 an ounce. Investors will closely watch the central bank's press conference. Of course, that had already happened at this point. And he basically said that everything looks good for the economy, and there's no really many signs that are cautiously optimistic that there's no really signs of any cracks in the economy as of right now. Of course, it has been said in prior comments in my videos about the Fed's statements about the economy. They're going to be as bullish as possible in the economy because they don't want to spark fear or anything like that. There was no surprise in the Federal Open Market Committee's decision to keep interest rates consistent into 2020, Jeff Wright, Executive Vice President of Gold Mining Inc., told Market Watch. The FOMC statement is pretty much the same as previous guidance. Yeah, most everybody had pretty much thought the same thing. Highly unlikely that they are going to raise rates or lower interest rates further. The FOMC's so-called dot plot, another tool in guidance, indicates stability in rates through 2020, with the current data showing potential to raise rates in 2021. Oh, okay, that's interesting. That tells us that the guidance is pointing to not as much of a likelihood of a recession to happen next year. That would be good news if it holds to be true. While this could disappoint gold markets and investors, it is just based on data up to today. While not a dovish statement, not hawkish either, just recognizes rates do not remain at one level forever. So if you think about it, if we get no movement at all, and no interference at all with the Fed, with the rate cuts, that is going to be potentially good news for the economy. However, there has been more activity in the repo markets and repurchase agreements between banks and the Federal Reserve, making more buying and selling, and that's going to continue through January at least of next year, and that has some people nervous. And it could be because, well, eventually some of these baby boomers may be retiring, getting their money out, which means that there's less to go around, perhaps. I don't know. That's just a theory or a thought. Gold could trail off a little, but should hold the 1450 to 1460 range and could return towards $1,500 in the near term as we get into 2020, said Wright. The China trade deal is still a risk. Brexit is an unknown, and the impeachment trial, most likely in January 2020, is not relevant for gold markets right now. Plus, we had just announced the USMCA trade deal. Apparently the Congress is going to pass it, the House of Representatives, that on the day of impeachment. And by the way, impeachment looks to have very little effect so far. Of course, we haven't even had a vote in the Judiciary Committee yet. However, look for that very soon. By all accounts, it looks like it's going to happen in the House of Representatives, and the president will be impeached on 2 counts. Which are much less abrasive than in prior impeachments. In fact, I think this is probably the least caustic impeachment in history of the United States. In other words, these impeachment charges hold very little weight, and it's like throwing a softball into the Senate, where all intents and purposes the president will be exonerated there. Developments on the China-U.S. trade front have served as an important catalyst for precious metals. That is for sure. I think if anything has been moving them, it has been trade, has been the forefront, keeping the asset trading within a range between 1470 and about 1500 for the past several weeks. Optimism that a trade deal can be achieved as a Sunday deadline for further increase in China import duty looms has helped to put pressure on bullion, however. Gold's near-term performance is expected to remain suppressed as long as a flare-up in global trade tensions remains unlikely, and investors continue to expect a U.S.-China trade deal, Han Tan, market analyst at FXTM, told MarketWatch. Still, seasoned investors would only be too aware of the fact that the situation remains fluid and unpredictable, with gold bulls standing by to push prices higher on any sign of trouble out of the U.S.-China negotiations. And as I've always said, I'll believe it when I see it, hear about it being signed. White House advisors Larry Kudlow and Peter Navarro have both indicated that tariffs scheduled to hit Chinese goods on December the 15th are still on the table, following a report from the Wall Street Journal that said both parties were bracing for a delay of a tariff increase on China goods on Sunday, which would be read as an escalation of tensions. On top of that, the UK's general election is scheduled for Thursday, which could help determine the course of Britain's exit from the European Union, but a narrowing margin of recent polling for Prime Minister Boris Johnson and his Conservative Party has injected some doubt into the outcome. For now, the narrowing the UK election polls has given rise to Brexit uncertainty and is keeping a small bid under gold, wrote Stephen Hines, Chief Asia market strategist at AxiTrader in Daily Research Note. Among other metals, silver was up 1.28%, adding 14.7 cents, or 0.9% to end of 1684.9 an ounce, following a 0.4% gain in the last session. You know, there's a lot of uncertainty out there. I think once we get trade taken care of, at least phase 1 with China, and Brexit squared away, I think it's going to be smoother sailing for both gold and silver in terms of their prices are concerned. If USMCA works out very well, and it looks like it's at least passed, that'll be a boost to the economy. That means, you know, if trade is passed, if the economy continues to do well, Brexit is done, and that's taken care of, well, we're going to see gold and silver stay low. They'll stay low except for the potential for silver possibly to increase if there's an increase in demand. And that is the thing to keep in mind, people, is that the economy could do very well next year, and we could see an increase in demand in the use of silver for electronics, for industrial use, especially in India. India could come into play. I've talked about that before. Demand in India. That could cause silver to go up, and potentially over $20 an ounce for the demand because of a good economic situation. There's a case where silver's price movement will be affected solely based off of it being a commodity, and where gold could essentially go down in price silver could rise in price, normalizing the gold to silver ratio. That is something that could happen to play a part in doing it in a good economic situation. Part of me hopes that happens. We'll find out. We'll see what happens. But there's your news for today. Very fascinating indeed to kind of see these markets. As is always the case, you and I, we accumulate gold and silver. Why? Because it serves as a savings account. It's a savings account and a hedge against economic instability. In the case of things like what could go on with the economy, a depression, a recession, hard economic times, or what have you, this is why we hold it. It's a savings account to protect us against that situation. We're a nation that's ever increasing debt. We're a nation that's printing money, and we're basically betting on the stability of the dollar derived on people's faith in it, not only in this country, but around the world. That will only go on for so long. But who knows when it will change? Who knows what's going to happen? I believe there will be a reset of the dollar in due course before some major disaster, financial disaster hits. There's a lot of uncertainty out there. And so that's why we hold these precious metals. So there you have it. I'm going to remind everybody that I do post videos on a daily basis. So if you don't see a video show up in your notifications or in your subscription feed, you can always go back to the Salivate Metal channel page and you will see a video there most likely every single day. So I'd like to extend a multitude of gratitude to you all for watching and encourage you to please rate, share, comment, and subscribe.